much know what the Fed feels about things. The governors have been very positive about that they're going to continue to raise rates for a while. The JOLTS report could be very important. 11 million is the consensus. And if it's significantly different from that, that could be market moving, maybe in a different way, in that if it's very high, the market might like it because they might think, well, the Fed is going to slow down. And so that's going to be a very important report to look at. We actually think the Fed is going to slow down. So we're looking forward to seeing that report.
All right, some other big news out this morning. The Secretary General of OPEC passing away overnight. Obviously, energy, the whole energy complex has been very volatile. We've seen some big rises. Recently, we've seen a fall in oil prices. How do you see this impacting the energy market that's also very sensitive to these recession fears?
Well, like other markets, when a bull market is happening in a certain sector, let's say the energy sector in this case, you can have some very quick, big declines. And we certainly have seen that lately. But when you look at the long term, the oil market and commodities in general are the place to be over the next few years. They're going to become the Tina, that there's no other alternative as stocks and bonds continue to have problems. Yes, bonds have declined, yields have declined lately, but it's still going to be relatively range bound. And stocks, especially if we're going into a recessionary type of time, are going to have problems. So we are very positive on energy. Obviously, that was the only sector that's been up so far this year, and we think that's going to continue.
So, Chuck, you're positive on energy and other commodities, but recently commodities have taken a bit of a dip. I was just looking it up. Gold's down about 4% over the last month, despite inflation, and often it's seen as an inflation hedge. We've seen copper down more than 20% over the last month. A lot of people feel like that's a leading economic indicator. And one that I was really curious, I want to get your take on this. Palladium's also down about 2%, 3% over the last month. And that's something that we need for everything electronic we have in the whole world. And the supply has definitely been, let's just say, lessened due to the Russian-Ukraine war. Why aren't we seeing rises in those commodities? And what should that tell us about the markets?
Well, the U.S. dollar has been so strong. And that has affected all the commodity prices, whether it's oil, precious metals, copper, some of the other metals that you talked about. But again, we think this is a short-term situation. Certainly with lower yields, the U.S. dollar becomes less attractive. And most importantly, if the market starts to feel that the Fed is not going to be raising as quickly or as long as they expect, then the dollar is going to drop significantly. And because we have negative real rates, it's going to be a place to go to will be the precious metals, and especially metals such as palladium that also have an industrial component that are short in supply. Yes, the economy may slow down, but automobiles, which is the major user for palladium, is considered to be made. And more palladium is needed in electric vehicles than in gas or diesel vehicles. So we're bullish on all the precious metals, and we think especially gold stocks should be bought here on this dip.